All right, it's wedding season, and according to Knot.com, about 2.5 million weddings will take place this year alone. I was one of those, got married a couple months ago. Now, if you're just getting married or thinking about marriage, you may want to listen up because the big day can impact your money and definitely your taxes. And of course, joining us to talk about that is none other than CPA Kimberly Washington. What you need to know about this. Now, Kim, we know that taxes change when you get married. Now, what should couples know when it comes to this?
Right, so when you're thinking about taxes and marriage, of course, you need to know a couple of different things. The first thing, of course, you need to know is that number one, if you're married by December 31st, the IRS considers you married throughout the whole year. And generally, you have two options. That's married filing joint or married filing separate. So you do want to talk to a tax professional concerning your situation, but that's basically what you need to know at this time.
Yeah, now speaking of filing separately, what are some of the limitations of filing separately from your spouse?
Right, so if you do choose to file married filing separate, one thing that you do need to know is that the IRS, or often people may refer to it as a marriage penalty. And that's because certain tax credits you're not able to take. Some of those tax credits are the child and dependent care credit, or an income tax credit, student loan deduction. But in some cases, it still may be a good idea to file married filing separate. So again, you do want to talk to a professional concerning this.
That's a big deal. Now, Kim, we know that we live in a community property state. Now, how does that impact your taxes as a married couple?
Right, it kind of complicates things. I'm just being honest. We live in Louisiana, so if you do choose to file married filing separate, it's still not as easy as you may think. And that's because you have to split up the income equally. For example, one spouse may earn rather $100,000, another spouse may earn $50,000. You both need to report about $75,000 on your taxes. So that could get a little bit complicated, but because we live in a community property state, there are some different rules you need to adhere to here.
Absolutely. Now, Kim, finally, for those that just got married, what are some steps they should take concerning their money and their taxes?
The first thing, of course, you want to make certain that you look at your different accounts and see what changes that you may need to make. First thing, too, you also want to think about as it relates to your name. Do I need to change my name with Social Security? Because, of course, that can impact your taxes, too. But review your insurance, financial accounts, and see what things that you need to put together and what changes need to be made, of course, because of your new decision of getting married. So that's some things you want to think about at this time.
Giving us everything we need to know to save our money and save our bottom dollar. Kimberly, as always, thank you so much.
Thank you so much.
All right, let's turn things over to our Jared leading us out with the